Well, folks, I hope you got your flapjacks ready because it's about to be flipping out there. It is an insane next few days in the financial markets. I'm going to take you through everything that's going to transpire here over the next few days in the financial markets, the stock market. And we have so many economic indicators we're going to be getting over the course of this week that I'm going to take you through. Earnings, that's going to be the main thing we talk about in today's video because we have an earnings extravaganza on par for this week, okay? This is the craziest week for earnings we've seen since probably late October, early November. Absolute insanity, including obviously Tesla earnings. We're going to talk about Tesla earnings. Do I think the stock's going to go up? Do I think it's going to go down? What do I think is going to happen there? We'll talk about that along with other stocks I have strong opinions on as well. Before we get into this, let me know what you think about the camera quality. I'm using a different camera here today, so if you think it looks worse, if you think it looks better, I'd love to hear from you guys if, kind of what your opinion is as far as the camera quality. Do notice no difference between this and my normal videos. So let me know. And I know a lot of you guys also kind of just listen to these videos as well. Like a good chunk of you guys, you'll listen to it at the gym or in the car or whatever, so you don't actually get to watch the video. So, but anybody that, watches the videos, let me know if it looks better, worse, or the same as usual. I'd love to hear from you guys as always. And I appreciate every single person that's subscribed to the channel. Grab a glass of chocolate Oatly. We got a lot to go through, okay? So first off, before we get into earnings and all that type of stuff. As far as economic reports, we have Monday, you have leading economic indicators coming out. Tuesday, we have manufacturing PMI, which is always something the market's looking at. You have services PMI. No, all these economic indicators are going to matter more and more as this year goes along. And this is something very important for all investors to kind of keep in mind in regards to all these different, and by the way, Thursday and Friday are crazy. We'll go through that in just a moment. But the reason all these economic indicators and what's going on in the actual economy is going to matter more and more and more, okay, is with inflation, is becoming less of an issue. It's still an issue, right? But it's becoming less of a storyline. The Fed, as especially they stop raising rates as aggressively, they're going to become less of a storyline. So basically what we're going to have transpire over the next 6 months is the Fed and inflation, which has completely dominated the market over the past year, is going to slowly drift away from being the most talked about thing to the economy being the most talked about thing, job losses being the most talked about thing, wages versus inflation, real wages, right? Versus inflation. Like, these are going to be the subjects that are going to start to dominate the stock market. And those will start to be the things that actually move the stock market rather than, this person from the Fed came out and said this or that, right? We're in the last stage of like the Fed and inflation just completely dominating the market. And we're about to move into this next stage, which is economy, which is earnings and like what's really happening here, right? And we know over the long term, especially, the market's dictated by where do interest rates go, but also where do earnings of companies go, right? And so that's where the market's about to head here. So it's going to be a very, very interesting time. On Thursday, you have initial jobless claims come out, which once again is going to be something everybody's paying attention to. A lot of these big tech companies have obviously started laying off employees in mass over the past 6-7 months. But in terms of the major job losses, like where do you get hundreds of thousands of jobs being lost or even millions? That's going to be from blue collar jobs. And unfortunately, we're likely going to see that during the course of this year. And so this is going to be one of the most important things that will be looked at in 2023. Everybody's going to be watching the jobless claims numbers. You're going to hear this start to be talked about as maybe the number one most talked about thing in the market, or certainly one of them as this year kind of ticks along, essentially, okay? You have real gross domestic product. You have final sales of domestic purchases. Now, here's the problem with a lot of these government numbers, right? Is, in these estimates and all these different things, is what we're starting to see is a lot of these government numbers they're putting out, then all of a sudden get revised a month later, 2 months later. And sometimes most of the time, what I'm seeing, they're getting revised worse. And so this is something that's troubling for the market because a lot of people don't have faith in the government numbers. Because if the government puts out, this number, that number, and then, while no one's looking a month later, 2 months later, it comes out that that was actually a way worse number, right? And this even can sometimes get into politics because there was a number that basically right before the recent elections, right? There was some numbers that came out, let's just say, and they looked supposedly better, and then they got revised very negative. And it's like, could that have changed maybe some of the election outcomes? We don't know. And so that's kind of the troubling thing, and a lot of people start to lose faith in the government numbers. And when you start to lose faith in the government numbers, it's never a healthy thing for the market overall. You got durable goods orders coming out, 8:30 a.m. You got core capital goods orders coming out. You got Chicago Fed National Activity Index, and you've got new home sales coming out at 10 a.m. Thursday, which I doubt will be very, very good. Home sales are likely going to be in a tough place for the next year. And I think something that's very telling, right? How do I know home sales are going to be in a very bad place for at least the next year, if not longer? The reason I know that is not just around mortgage rates. It's not just around what's going on with the economy. The important thing I look at are what are home builders doing? Home builders know way more about what's going on out there than I do, than you do, than anybody does, right? And what I'm seeing from the home builders when I go through these companies' earnings is a lot of these home builders are canceling basically new orders for more lots and more land. And they're trying to back out of a lot of contracts for more land and lots. Now, why would they do that? There's only one reason, and it's because they know that the market's going to be weak for some time, and so they want to preserve their balance sheets, and they understand that if it's a weaker market, they might be able to get land and new lots for a cheaper price a year from now, 2 years from now, especially if the market weakens substantially. And so that's the only reason home builders do that. And so that's one of the other factors that you got to look at, and you got to say, wait, why are these home builders like not buying more land? If they were confident that the real estate market's going to improve anytime soon, believe me, they'd be gobbling up as much land and as many lots as possible. But they know real estate's likely going to be weak for at least a year, if not several years. Okay? And so that's not going to magically fix itself. You look at these companies' earnings and what's starting to happen, their backlogs are starting to dry up in a significant way. And that's just something that's going to continue to play out there. Friday, what do we have going on Friday as far as economic related things? Real disposable incomes, real consumer spending. You have PCE price index. These are the type of things that people pay attention to as far as inflation goes, okay? Which is still obviously a big subject as of today. It'll start to become less of a subject as the year goes along, but right now this is stuff that the market's looking at heavy. Core PCE price index is coming out. PCE price index year over year, core PCE price index year over year. You got the University of Consumer Sentiment. Now this matters in a significant way because the consumer sentiment we've seen from that survey over this past 6 months is the worst we've ever seen in history. In the history, which that survey goes back decades. So for that to be showing up the worst ever is pretty telling, right? And why have consumers been in such a bad place? Not much confidence, right? And second piece is inflation's been eating their money left and right. So they don't have a lot of faith in the government. They don't have a lot of faith in the economy, and their money's being eaten by inflation. I mean, why would consumer sentiment be in a high place? It's not going to be in a high place given that type of environment, right? So that's going to be coming out. Keep your eye on whatever those numbers come in at. They've been, like I said, over the past 6 months, it's been among the worst we've ever seen in the history of that survey. And then Friday, 10 a.m., pending home sales come out. Don't expect numbers to be good. Any of these home sale numbers, sometimes people get excited because all of a sudden they'll see like mortgage applications up for 1 week or a few weeks or something like that. None of that stuff matters. At the end of the day, we're in a major bear market for real estate that we've just entered into that's going to last anywhere from 12 to 36 months. Okay, we got a long way to go with that. So it's no different than when you're in a bear market, kind of in the stock market, right? And you get 1 week where the market goes up. You can't get excited about that. It's like, okay, so what? We're going to be lower next week or the week after, and that's kind of real estate right now. Don't get excited about these numbers because you all of a sudden hear, oh, mortgage applications are up big, pending home sales are up big this week versus last week from our survey, and blah blah blah. At the end of the day, like I said, look at the home builders, look what they're up to. They're clearly not bullish on real estate based upon not their commentary, based upon their actions. It's very important to pay attention to folks' actions rather than just words. Speaking about words, Fed. I'm sure we're going to get a bunch of Fed folks out this week, as we do every single week. It seems like all these different Fed officials and folks always coming out talking, got something to say, right? Now, we're getting a little conflicting stuff here. And the reason being is you're starting to hear stuff like this, right, which is the Fed taking more of a soft approach to the markets. But at the same time, the Fed kind of needs to keep an aggressive approach out there until inflation's really at a point where everything looks fine. Otherwise, we're risking loosening, obviously, kind of just let's call it debt markets loosening everything, right? And potentially spiking inflation again. And so this is why it's very important that the Fed stays committed to not just decisions, but commentary around, hey, you know what? Expect high rates for a long time. We're not done anytime soon. We didn't come this far for nothing. That's honestly the stance they have to continue to take. So if they take this more soft stance, the market pops, and then it just makes their job harder, right? Which means we could be in a situation where all of a sudden everybody's expecting, only 25 basis points, and next thing you know, the Fed has to do 50 basis points or go back to the 75 basis points. And would that cause a shock to the market? Because no one's expecting that at this point in time, okay? Well, that's not the right thing. Alrighty, next up here, earnings. Let's talk about earnings. There's a lot of super important companies reporting earnings this week. What are my opinions on those? What are the companies I'm paying attention to? Why am I paying attention to them? So as far as Monday goes, only one company I'm personally paying attention to. This baby right here, Logitech. Why am I paying attention to Logitech so heavy? Well, the reason being is a very large investment of mine is a company named Corsair Gaming, CRSR. They are somewhat of a competitor to Logitech. Logitech more focuses on folks that are maybe just in the business space and folks that need those sorts of products, whereas Corsair focuses more on the gaming side, right? And so they have a little different kind of approaches in the market. But at the end of the day, like a lot of the same products these companies sell. They sell cameras, right? Because Corsair owns a company called Elgato, which makes cameras and microphones and all types of stuff for streaming folks, right? Logitech makes a lot of those similar products, just branded differently. And they sell keyboards and they sell mice and all of those sorts of things, right? And so this is a company I'm going to be paying very close attention to. And Logitech stock moves very similar to Corsair stock. These stocks have gotten obliterated over the past year. I mean, absolutely obliterated. If you look at Logitech, by the way, Logitech's a great company and honestly probably has a very, very good, let's just call it future in front of it, not just a good past in front of it, right? But if we pull up Logitech over the past, let's say, year, right? Stock down about 28%. And if we pull up Corsair Gaming struggled a lot over the past year as well, right? Corsair down 31%. And the way I kind of look at these stocks is, in an uptrending cycle, I expect Corsair to outperform Logitech, which I think we're about to go into an uptrending cycle for companies like Corsair and Logitech, right? And so I do believe Corsair, that's one of just many reasons I own Corsair rather than own Logitech. It's a tough decision. It's like, do I buy Logitech stock or do I buy Corsair? I do believe Corsair will outperform Logitech over the next, let's say, 3 to 5 years, but I do believe Logitech's going to come along for the ride and do very well by itself as well, right? Now, we've been in a downtrending market, so Corsair's obviously done it a little worse than Logitech over this past year. But nonetheless, my eyes are going to be on Logitech, and if you own Corsair stock, or obviously Logitech stock, a very important afternoon after the close on Monday. Tuesday, we really get rolling. Tuesday, you have Verizon, you have Johnson & Johnson. Johnson & Johnson is one of those massive companies. It's just important to kind of take a look and see what's going on with their margins, what's going on with their market share. Are they losing market share to private label brands? That if they are, that just shows there's more and more weakness in the consumer out there, which gives you more and more worry about the economy. If people are trading down from, the name brand products that Johnson & Johnson has to store brands, it shows that the consumer's not in a good place. When people like to buy name brand when they're feeling good about their economic situation, and they don't mind paying an extra $1 or $2 or $3 for the product. But when people are tight on money, they go to private label products. And so that's something to kind of keep in mind there. Lockheed Martin obviously has been a pretty tremendous stock based upon all these defense contractors have been in kind of a good spot here recently. 3M's a great dividend stock. It's an interesting play from a dividend perspective if you're kind of looking for a dividend stock out there. I think that one's important to keep an eye on. It kind of fall into that Johnson & Johnson category as well. Union Pacific, it doesn't get bigger if you want to know what's going on with the economy than Union Pacific. Keep a close eye on there. D.R. Horton, they're the lowest end home builder. Now, the reason the stock is so important to pay attention to, in my opinion, is that company is really going to let you know how the middle class and even let's say folks that or maybe like the lower end of the middle class, how those folks are doing. Because even in the middle class, you kind of have the lower end of the middle class. You have what's, in my opinion, called the true middle class, which are folks that make about $50,000 to about $75,000 a year. And you have kind of the upper middle class, which in my opinion are folks that make anywhere between about $80,000 and about $30,000 a year, right? And so D.R. Horton really, really caters to, let's say, the folks that make like less than $75,000 $35,000 a year. And so I think that's an important home builder. Whereas a Toll Brothers competes on the very highest end. And so they're dealing with usually the folks with the highest credit scores, the biggest incomes, the highest net worth. D.R. Horton's on kind of the opposite end there. So if you really want to know how those folks are doing, pay attention to what orders are coming in at D.R. Horton, right? But I think there's one thing that's good for D.R. Horton is they're usually the cheapest in the market in terms of new homes. So they could actually benefit from somebody that, let's say, maybe usually would have bought a KB home, which is a little maybe seen as higher end than a D.R. Horton home, right? Or maybe bought usually a Lennar or something like that, but they're trading down to a D.R. Horton. So that's the conflicting thing that could be a little confusing in regards to D.R. Horton that I think you got to keep in mind there. What about the person that maybe usually would have bought a KB home or a Lennar, but instead they're buying a D.R. Horton? So actually in this sort of market, if I was a home builder, I would either rather be a Toll or I'd rather be a D.R. Horton. I either want to be the most premium or I want to be what is seen as the least premium and the one that sells homes for the least price. Because I feel like at the end of the day, folks that have money are still going to have money, right? And if you're talking about people that want to go buy new homes, if budgets are tight, they're going to go to whatever's the most affordable. And D.R. Horton is the most affordable. So I do think that's something to keep in mind there. And so if you do see decent numbers from D.R. Horton, do understand it could be people trading down, okay? And for the close, it doesn't get bigger than this. Microsoft, pretty much the biggest market cap company in the world. Good old Mr. Softy, it's always between them and Apple, battling it out there. So obviously that's going to move the market in a tremendous way. They should have solid earnings. They always have solid earnings. The one confusing thing is they're spending like crazy. They have an Activision Blizzard deal, which is a pretty big deal for the company, that we'll see if it actually goes through or not. They also just invested, from what I saw, I believe it was $10 billion in ChatGPT. So they actually spend a lot of money right now. And we'll see if that causes any concerns for folks out there, right? Intuitive Surgical, which is kind of a robotics surgery company, very interesting stock there. Not a stock I've ever owned, but actually one you should look into a little bit and maybe keep on your watch list. Texas Instruments, TXN, there's this huge semiconductor company. It's going to let you know how the semiconductor companies are doing. Capital One, do not be... So Capital One is usually known as the entry-level credit card for a lot of folks. And actually, my first credit card ever was a Capital One credit card. I think I got it in 2009, had a bad experience, and then didn't have credit cards for the longest time. I mean, the longest time. Like years and years and years and years. I just was kind of turned off the experience, and I also hate paying interest, right? And then I kind of learned the game of like, well, you can get your credit rating up and you can actually, obviously make money from credit cards, and as long as you pay it off right away, you never pay interest on it. So I eventually got credit cards down the road, right? And I've just always stayed by the principles of paying it off right away. So you never have interest or anything there. So if you spend $1,000, pay it off right away. You get your points for it, right? You get some money back. You get your credit rating in a good place, right? But that's very important. The problem is a lot of these folks don't do that. What they do is they swipe those credit cards, as Mav would say, up and down, up and down, up and down, right? And then what do? They don't pay it, or they pay the minimum payments. And the next thing you know, that interest starts accruing more and more and more. But if the economy gets rough, I'm telling you, and if people lose jobs, a company like Capital One will take epic losses. And I think they're just one of many companies. So Tuesday, big day nonetheless there. Wednesday, this is the one that's got everybody's attention. As far as before the bell, I'm not paying attention to too much there. I'll keep an eye on all these earnings, but nothing there that I care about too much, to be honest. Obviously, we know what's going on. Tesla, okay? So that gets all the attention. I will keep an eye on Las Vegas Sands because I do own a company named Wynn Resorts in my dividend account, and I will keep an eye on CSX because that's going to let you know how the economy is doing. But Tesla, okay? Tesla's a very simple story, and if you want to know if this stock's about to go up a bunch or down a bunch, okay? Very simple story. If Elon Musk comes out and says, one, he's going to be much more dedicated to Tesla over this next year than he was over the past, let's call it 6 months, stock moves up huge. If Elon Musk comes out and says that demand has gone insane for Tesla and they're going to be at full production for all their facilities for a long time because of the price cuts there, stock moves up huge. If Elon Musk says, margins aren't going to be hit nearly as much as folks expect and we're still going to stay extremely profitable, stock goes up huge. Okay? If they get those three things, that's a trifecta. The stock makes an epic move. I'm talking like 10 to 15%. If you only get two of those, it'll be a smaller move. If you only get one of those, it'll be a smaller move. Now, if you get any sort of situation where you don't get those and you get opposite. And if Elon comes out and says, hey, margins are going to get hit bad, our profitability is going to take a major hit. Demand's coming in pretty strong since we did the price cuts, but it doesn't sound like it's insane or anything like that. That's a moment that you'll see a move down in the stock price, right? And so just do keep that in mind. It's a pretty simple game with that one. And as far as this last quarter, does Wall Street, is this stock going to move based upon what happened last quarter? Nope, not even 1%. No one cares about what happened last quarter. People only play Tesla for the future, only for positive or for negative. So everybody just wants to know about demand, margins, profitability, and Elon's focus moving forward. That's going to be what gets all the attention in its earnings, and that's will be what ultimately dictates where that stock price moves after hours and into the trading day on Thursday. Next up here, on Thursday. Thursday's a big day. This might be the biggest day for actual earnings, okay? You got American Airlines, you got Southwest, which don't be surprised if American comes in with pretty good earnings. Southwest could be messy. Southwest should have been good earnings, but they went through a dramatic situation around Christmas time, if you remember. And so, nonetheless, Southwest earnings could be a whole mess. MasterCard will give you some insight on how the economy is doing overall. I think that's one just to keep an eye on. After the close, Intel, which is an interesting kind of dividend proposition there. Stock's been devastated. They're building out some massive facilities all over the place right now, including some in Arizona right now, which is where I have another house, and obviously that's my original hometown, right? But the problem with Intel, they have major competition from NVIDIA and AMD, and they've just had really trouble getting their footing, to be quite frank, over the past 5 to 10 years. And I don't know if that's going to change anytime soon, at least not this year. And so Intel just remains in a tough place. You're going to have Visa, going to give you some good insight on what's going on with the economy. Knight and Swift Transportation. This is like kind of paying attention to railroads. You want to know how the economy is doing and how the economy is likely going to shape up here. Pay attention to companies like Knight and Swift. They're much smaller market caps. They don't get nearly as much attention. But I'm telling you, when these companies are doing great, you know the economy's doing great. When these companies are starting to falter, their earnings are falling apart, their revenues are falling apart, when they're given bad guidance, that's when you know, things are starting to get ugly, and what ultimately you'll see is major job losses. Olin is going to be reporting earnings, and they used to have a funny business. I don't know if they still do. I don't follow the stock, but they used to have like a chemical side of their business, but then they also used to sell bullets. It was a strange company back in the day. I don't know if they still do that or not, but that was Olin back in the day. Friday, before the bell, Chevron reporting earnings. That will be obviously a market mover. That's one of those Dow stocks, huge S&P stock, right? American Express, another one to pay attention to. This is one I'm actually worried about. If the economy starts to get hammered, I think American Express has gotten very, very, let's call it loose with some of their policies, and I think that could come back to bite them in a significant way. Colgate-Palmolive, which is obviously just a consumer staple company, that everybody's going to be kind of paying attention to there. And so nonetheless, guys, this is an absolute massive week. And to be quite frank, the next 3 weeks are massive weeks for earnings. This is the first week. Next week, we're going to have to deal with Apple and all those big dogs. But this week, when you got companies like Microsoft reporting, you got companies like Tesla reporting, the market will move in a lot of these oil and gas giants, companies like Visa and American Express, right? These are market movers, so it should be an absolute entertaining week out there. I'll try to keep you guys up to date on everything going on between this channel and the Reaction channel. As always, the Patreon portfolio is off to a smashing start. Already up 9% on this portfolio, and we just started at the beginning of January, so it's absolutely killing it so far. We'll see how it transpires over time. And basically every single Friday, I put $150 into the account and make moves with that money. And so far, it's turned out pretty darn good. I use my GVD 1-2-3 strategy in regards to this account, and we'll see how things transpire over time. If you're looking to get access to that, including all the buys and sells I make in that portfolio, check out the pinned comment down there. If you're looking to apply for my private stock group, private wealth group, and get access to that, and to apply for that, check out also the pinned comment down there. It will also be in the description area. I appreciate everybody joining me as always. Thanks for being subscribed, and have a great day.